Today is Thursday, June 13th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Kevin Merko and Jason Fernandez will discuss the latest on the crypto markets with us today. But first, let's take a look at some of the market indicators. The cryptocurrency index, CCI 30, has moved gradually up to approach the 4,400 point mark. Its month-to-date decline has moderated to just over 4%, and the index is up by 100% year-to-date. The 30-day Bitcoin volatility index has continued trending lower, and it is approaching the 4% territory. The CoinMarketCap website's 24-hour traded volume indicator has shown no significant change, as it measures slightly more than the $65 billion. The Messari website's real-time volume is near the $2.6 billion level. The Bitcoin dominance indicator has slipped towards the 55% zone as altcoins outperform Bitcoin today. The top 5 digital assets are mostly trading higher. Bitcoin holds the ground above the $8,100 mark after jumping yesterday. Ether is facing resistance around the $260 level. XRP has moved north of the key psychological level of 40 cents. Litecoin has retreated slightly after printing a fresh 52-week high at more than $140. And lastly, Bitcoin Cash is looking to establish ground above the $400 mark. The Green Coin 360 heat map showcases the generally bullish mood that we are seeing on the crypto markets today. According to the Token Spread website, the XMO and CEX exchanges have the biggest price difference for the Bitcoin dollar pair, and it is 0.41%. The XMO exchange has the biggest buy and sell side difference of 0.29%. We will now take a quick look at some of the characteristics of the Quant project and its QNT token. The Quant Network team has developed Overledger, which they describe as the world's first blockchain operating system. This OS interconnects blockchains and in existing networks to blockchains. This allows creation of internet-scale multiple chain applications that are called M-apps. This system currently interconnects the so-called Enterprise 5 or Corda, Hyperledger, Ethereum, Quorum, and Ripple. The QNT token is regulated by Swiss Financial Market Supervisory Authority, or FINMA. This digital asset is intended to provide digital access to an application or service. Its price peaked at nearly $6 in February of this year, and as of today, it trades at just slightly more than $4.70. We will now review the performance of various cryptocurrency asset classes as grouped by the Messari website. The infrastructure group posts an increase of just under 1.7%. This is plenty of green here in the sector. The media and entertainment category is slightly in the negative territory. This comes as the Theta token shows a decline of nearly 4%. The financial sector is up by 1%. There are plenty of solid increases here in this group. The currency category is the top performing asset class today, with a gain of more than 2%. Bitcoin SV is one of the bullish factors with a double-digit surge. And lastly, the services section has gained nearly 1% despite some of the top assets trading in the red. This is where the 5 major cryptocurrency categories stand so far this Thursday. Now, before we head to a short break, and then we will join our crypto experts, we'll leave you with a quick look at the most significant gains and drops among the top 100 digital assets. Let's take a look.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
And we're back with Kevin Mirko, CEO of the Coin Metro Exchange, and Jason Fernandez, COO and co-founder of AE Token. Guys, great to have you. How are you doing today?
Excellent. How are you doing, Leah?
I'm good, thank you. I'm good. Now, Jason, we'll come to you first. The markets are in the green across the board as Bitcoin has broken through the 8K resistance level. So BTC has actually remained in the range limited by 7K and 9K for approximately 1 month now. So do you see this trend continuing? What's going to happen?
I think it will breach 9K fairly quickly. I think that just the behavior we've seen just recently when it dropped and how quickly it recovered, and it was trading just below 8,000 for a while. We saw it pop up past 8,000 yesterday, and now it's almost comfortably in the 8,000s, 8,150, something like that. So I think the next step to look at would be 8,500, and then after that, I think we could soon breach 9,000, particularly because we've seen that number before. So we already breached 9,000 just a couple of weeks ago, and it's always easier the second time around, especially when it's this recent. So most traders are going to see what happened recently, the drop as an aberration, and that expect Bitcoin to be rising steadily otherwise. So I think it will breach 9,000 soon.
Okay, so definitely reach 9K quickly, but is it going to stay within that range, or is it going to go past 9K? Kevin, what do you think?
Well, as ranges are concerned, 7 to 9 is $2,000 range on an asset that has a recent high of around 9,000. That's a pretty big range. That's a 22% range. So that's quite a large range. But when you talk about large figures, so 5,000 and 10,000 are your large figures outside of this particular range. 10,000 is definitely closer, and it's a much larger, let's say, magnet than 5,000 is. So I do think that we definitely will be fighting for 10,000. To get there, though, obviously we have to break through that 9,000 barrier. As Jason says, I think there's much more propensity for it to go higher at this point through that last high that I think it made around 9,080, something like that, a few weeks ago. So once that's pushed through, you're talking about then small figures inside that 9 range, 92, 95, 97, and then eventually upwards of 10. Like I said, 10 is a magnet. So there's going to be lots of sell orders at 10, but there's going to be lots of buy orders on the way up through those smaller figures as well. So expect a bit of chop, but I do think that 9 and 10 are in the near future as we move over the next couple weeks.
So very, very optimistic. Now, the Binance coin is one of the most bullish large cap assets today, as it printed a fresh record high by rising above the $35,000 level. Does the BNB token remain a good asset to have in your portfolio after these gains, Jason?
Yeah, so I think the optimism surrounding around Binance is really well founded, and it's basically because they've been able to sort of consistently add value despite the downturn. So, I mean, we know in early January they launched the Binance Launchpad, and very soon came out the gate with $59.8 billion BitTorrent, IEO basically that was roughly worth 7.2 million, and the offering essentially sold out in a matter of minutes, and apparently would have sold out even faster. Also, we know that in April they launched their own mainnet, which is Binance Coin, and so that was another really bullish factor for it. Significantly after that, the chain validators just recently have approved a lower fee structure for Binance Coin, and something like the lower fee structure cuts down fees by something like 50%. So again, that's been the cause of the most recent gains, and I think that will continue, particularly because of how Binance has behaved over the past several years, but at least the last couple years, let's say, because even when Binance was hacked, they were able to use it as an opportunity, and because of CZ's complete sort of transparency with everybody, you could almost say that people are more believing of Binance post the hack than before. So it's sort of been this hit after hit constantly over the past several months, and so I think as long as they keep burning Binance tokens, which they do, with some regularity, it will still be a token worth having.
Okay, so definitely something good to have in your portfolio there. And Kevin, do you tend to take a similar perspective, especially in light of the way Changpeng Zhao reacted to the recent hack?
Yeah, look, I'm an exchange owner, so my Binance coin face is a bit, like perturbed when I talk about BNB. But from a portfolio standpoint, I've always said exchange tokens are one of the best models that you can see for adding value to a utility-based token. So it's very easy for an exchange to correlate volume, to correlate profitability to the actual price point of their token. So when they do that correctly, it should only go higher. That's for sure. As demand rises, price should rise. Having said that, though, most of the things Jason mentioned, while on the commercial side, are great for Binance. They also skirt the regulator almost every time they launch a new product. So what I would say on the risk side is that IEOs, for example, regulators don't like these, guaranteed. It puts, plus, to be honest, from a risk standpoint, it puts a lot of risk on the exchange rather than on the issuer. So instead of having to go after 50, 60, 100 issuers, the SEC or agencies like them go after the exchange, which is much easier. So I think that while it is, and we have seen Binance restrict US IPs, we're starting to see them, I think, take more aggressive action. They've probably gotten some aggressive letters in the mail, I would imagine, from some agencies around the world. So I think on a risk standpoint, the products they launch, the way they launch them, a lot of them kind of skirt the regulator. So I think while the price point is obviously can go higher, and that's for sure, it probably will go higher, mainly because, again, there's a correlation between demand and the incoming fees and the actual value of the token. But be aware that they also add a substantial amount of risk every time they launch a product that isn't structured in the way that regulators more or less would like them to be structured. So there is still risk involved, but I would say that that Binance has the BNB token definitely has a good chance to continue to rise in value until at some point there's some type of regulatory hit, which might be inevitable.
Okay, so definitely some risks surrounding regulation there. Now, Jason, we'll come back to you. We did see the CoinMarketCap website's volume indicator post new all-time highs in May. The 24-hour measure surged past the $100 billion mark, and the over-the-counter exchange, Local Bitcoins, hasn't seen trading activity, surge past the level where it was during the market high. So what could be the reason for this difference?
So obviously, CoinMarketCap has shown all-time volumes recently. One of the things that's happened with Local Bitcoins recently is that they recently nixed cash transfers, so you can't really do peer-to-peer cash transfers anymore, and so they've lost a lot of the user base. A lot of the people that used to do transactions on Local Bitcoins have moved, because that was pretty much one of their major USPs. So I think a lot of the people that were using Local Bitcoins have moved to other exchanges. They've certainly lost a lot of their customers, and I think that's the reason for the lower volume.
Okay, very interesting. And Kevin, do you tend to take a similar opinion here?
Yeah, 100%. I mean, they obviously nixed those transactions because, again, I think they got a nasty letter in the mail too, probably a nice cease and desist from somewhere in the U.S. government, I would imagine. So I think, yeah, that's 100%. What I would say though is that keep in mind, and I love CoinMarketCap, list us soon. I like CoinMarketCap, but when you look at CoinMarketCap, they're getting data from unreliable sources. They do now have they're trying to go through new metrics to try to filter out some of that data. Understand, though, that exchanges are starting to realize that the more volume you show, the more business you get. So I do think that some of those metrics that are now shown from CoinMarketCap and from other industry players like CoinMarketCap that show data, when you're getting data from unregulated, unreliable sources that can pump any data they want through an API, and I think that most smaller exchanges, a lot of smaller exchanges are looking at Binance and looking at some of the top 10 exchanges and saying, well, they don't necessarily have anything better than we do, but they have the volume. Why? Well, volume attracts volume, and that happens in every market. So I do think that a lot of those numbers we're seeing, and even though they look great on paper, are probably only there on paper.
Only there on paper. Now, Kevin, we'll stick with you for the minute. Bloomberg reports that the Financial Action Task Force will publish a note on June 21st to clarify how participating nations should oversee virtual assets. Is this something that threatens the crypto industry, and can we expect more, even stricter regulations to actually drive trading to peer-to-peer platforms?
Well, I think the goal here of FAFT is to get the business away from peer-to-peer exchanges. The goal here is that, so in traditional banking, basically, if you're sending money from one bank to another, the bank needs to provide information. It's called the travel rule. The bank needs to provide information to the other bank about the person or entity that sent the funds. And they're trying to apply this to crypto, which in terms of AML makes sense. The problem is that they're trying to take an antiquated system and apply it to new technology, which is, well, for lack of a better word, dumb. But it's a step, and it's a step generally in the right direction if you're concerned about AML and money laundering in general. I do think, though, a lot of people are making a mountain out of a molehill here, mainly because if you're a compliant exchange already, this shouldn't be too difficult, because basically what you should be already doing blockchain transaction monitoring, which means you already know when money comes from an exchange, because all those exchange wallets are public. So you know already it comes from an exchange, meaning then you simply need to ask that exchange for information to verify that the information you have on file for that client matches the information from the exchange where the money was sent. That doesn't seem too difficult. What it does do, though, is slow down lots of other pieces of the network, because exchanges and other entities that are on or off ramps that aren't compliant are going to have a big issue. So I do think that overall it's, I like to say it's a good thing in terms of that. I think in order for this market to progress to where we want it to progress, we need to a certain extent appease regulators. We also need to help regulators understand that some of these regulations can't be applied because it's simply impossible. But in order to do that, we have to go through, like I've said a million times, sometimes you got to go up, a river full of, a word I won't mention on air to get to that promised land. And we're kind of halfway up that river at this point. So while I do think it will affect the market a bit, to be honest, it's not that onerous. And if you're doing what you're supposed to be doing already, you're already doing this. It's just a matter of now finding the protocol to share the information. And that's it.
Okay, and I think that's definitely something that we often hear, especially in terms of appeasing regulators to move the market forward. So Jason, we'll come back to you. What are your thoughts?
So I think this FATF regulations will actually have a really deep effect on a lot of the exchanges that, like Kevin was saying, haven't quite gotten up to snuff on the whole AML and KYC thing yet. And while it may be possible for larger exchanges to easily comply with regulations, generally it really hurts the smaller exchanges, because while it actually only affects, there are only 30 signatories to to this treaty. It would basically affect cryptocurrency businesses in over 200 countries. It would essentially force them to verify the identities of anyone sending or receiving more than $1,000 worth of digital assets, which basically cancels out the whole idea of pseudo-anonymity that people are used to when it comes to blockchain and Bitcoin and cryptocurrencies. And I think this is something that's obviously happening the world over. We've seen India is sort of cracking down. There's been communications that they might, well, they've been rumors rather that they might consider a 10-year jail term for people that are dealing in cryptocurrencies, buying or trading on any level. And that, again, I think comes down to like fears of things like money laundering, because we also know that they're instituting new rules where cash transactions over something like $12,000 or $13,000 will be taxed, and that's to again prevent large-scale cash transactions. So the rules when it comes to Bitcoin are certainly in line with that, and we've seen that again all around the world. We've seen how local Bitcoins has sort of stopped the cash transactions that they had, and that's obviously affected a great deal. Again, it's probably because they got some sort of letter about enforcement actions or something possibly. We also see Shapeshift. So Shapeshift last year, they had a whole policy where they were not, you don't need an account to use them. But then, of course, that changed in 2018, and they started basically having a mandatory membership program where people had to supply some information. So this move towards KYC and AML is happening pretty much industry-wide. And yes, it's good because to some extent it allows the industry a degree of legitimacy, but it is sort of against the whole concept of what Bitcoin was supposed to be in the first place. I mean, when you have a permissionless system, an ability to transfer funds and back and forth, essentially a completely permissionless system, and then you create a system based off of regulations where then you have to ask permission. So that sort of seems counter to the concept of blockchain and Bitcoin, although I understand that in order for Bitcoin's proliferation and cryptocurrencies proliferation, you would have to appease some degree of regulations. You just have to make sure that they don't get go overboard on that and shut down a nascent industry.
And it's interesting, really, isn't it, that you have this issue with regulation where that's exactly, like you said, why Bitcoin came about, and here we are having to actually implement these regulations to move forward. So it's quite an interesting situation that we're in now. The Ethernex exchange plans to actually cede operational control to a decentralized autonomous organization built by DAO Stack. So can this model of decentralized governance actually help with the regulatory issues? We'll go back to you, Kevin.
No.
Okay, no. Can you elaborate for us? Can we get a bit more on that?
Sure. I think just to touch on Jason's last point, and I fully agree. Look, I wish blockchain, I wish Bitcoin in general could live up to the Satoshi white paper today. Unfortunately, in the world we live in with terrorism and all this other nonsense and fear-based governance, that's not going to happen today. And a lot of proponents of Bitcoin say, well, you can't shut down a protocol. And that's theoretically true. But what we're seeing now is basically the shutting down of on and off ramps into that protocol. And since the only app that really exists on that protocol right now that anybody cares about is cryptocurrency, is Bitcoin and altcoins and the like, it doesn't kill the protocol, but it could very well kill the market. So there's a point where you have to appease, unfortunately, the people that govern us, which regulators are the ones actually that don't govern us. You have governments make legislation, and then the legislation is enforced by the regulators. So the regulator needs to be appeased to a certain level. Why? Because they're not going to just trust that the trustless system works. They're going to have to see it work. In order for them to see it work, you need to actually get it past them. To get it past them, they need to have a little bit of governance over it and a little bit of power over it. Once you give them that power, as long as it can be restricted to a certain extent, eventually you can prove the trustless system works and actually apply the trustless system. So it's kind of like when you're a proponent of something, all of us here are proponents of crypto and blockchain, right? We all want it to succeed. But I know guys that want people to be able to print out guns at their house on 3D printers. There's actually a lot of people around the world that think this would be a good idea. I'm generally not one of them, but they are very passionate about it, and they say, "Well, we live in free countries, and we should be able to do what we want. And I have a printer, and I have some plastic, and I want to make a gun." Mm-hmm. Well, I think that's crazy, and I think if you think about that, when you put the shoe on the other foot, people that come from the regulated financial infrastructure that know how easy it is for terrorist financing to happen and for money to move to notorious things and to fund drug runners and all this good stuff, and they see that if they don't act, that it could actually be very easy to do that over blockchain technology, well, then obviously they're going to stand up and say, we think this is crazy. Mm-hmm. So again, it's about coming to to a point where you appease a bit. We need to appease a bit. Just don't want to appease enough. Putting something on a DAO, something that the regulator doesn't understand, to try to mitigate the risk that the regulator might want to actually enforce regulation is ridiculous. And no, it would not work. It would not succeed, and it'll have absolutely no chance to succeed in front of a regulator, at least not under the current scope and how we currently operate.
Okay, so speaking with a lot of conviction there, it's an absolute no for you. So Jason, are you equally as certain that it's not going to work?
Yeah, so I agree. To recap, a distributed autonomous organization is essentially like a cooperative venture fund where you have a treasury that's co-owned by a decentralized network of individuals who have access and voting rights over how money is used, and then you have sort of varying governance styles. And so far with Phoenix's DAO, which is called EFX DAO, they have essentially 23 founding members, and then they expect that to grow much further, and essentially have a community that essentially votes on matters that are of importance to the cryptocurrency in general. The fact is that the idea being that they want to that the organization themselves that want to wash their hands off responsibility and sort of push it over to this DAO, whereby it's like sort of this whole organization will be responsible. But that's not really going to solve anything. As Kevin said, you're still going to have to, they would still have to comply with the regulations just as everybody else. So I'm not really sure how this really helps anything.
Okay, sure. Now, just finally, and very briefly for us, Twitter's Jack Dorsey appears to have taken a different path than Facebook. So instead of actually launching crypto services on Twitter's platform, he has created Square Crypto. The company has just announced hiring ex-product director at Google, Steve Lee. His latest LinkedIn post shows that he has been working on Bitcoin for more than a year. So is this hire a bullish factor for Bitcoin in particular? Kevin, we're going to come back to you now.
Well, it's another step in the right direction if you believe Bitcoin should be a payment vehicle. So regardless if you believe that or not, and you're still pro-crypto, pro-blockchain in general, it's bringing more eyes in. It's going to bring some adoption. The fact that Jack Dorsey decided not to add crypto into Twitter is probably not a terrible idea, considering the fact that that's kind of his main horse. And bringing something that's generally unregulated into the communications field, which is a highly regulated industry, even if you might not realize it, is probably a good idea. Segregating those two, a little bit of risk mitigation on his part, and then being able to focus on, I believe, what he thinks is really the key use or the key usage of Bitcoin, which is payments. Adding it to his payment company Square, I think makes perfect sense. So is it bullish? I wouldn't say it's market bullish, like the market's going to jump 20% tomorrow because of this, but it's long-term bullish because it shows that these people that are industry leaders in Silicon Valley are continuing to adopt crypto and continuing to add it into their existing infrastructures.
Okay, so definitely a good idea, but in the short term, not exactly bullish. Jason, what are your thoughts?
So I agree. I don't think the market, but it is one of the many bullish factors that has sort of converged over the past several months. Jack Dorsey is incredibly influential, and he's sort of a giant in Silicon Valley. So his support to Bitcoin via Square, is hugely important. He recently said that he was going to create this team, and he sent out a tweet basically asking who should be on it, and that it was going to be something that he was going to be personally supervising. And of course, we hear, Lee is one of the persons who's joined the team, and he's essentially an angel investor who's basically lists Lyft, Pinterest, and Yardbaker as some of his key exits. So he's certainly somebody that people are aware of in the crypto industry, people are aware of in the industry at large, and so that would imply that Jack Dorsey is serious about whatever they're trying to do with crypto. So overall, it is bullish. Will it move the market? Probably not.
Okay, but overall, definitely bullish. As always, Kevin, Jason, thank you so much. It's been an absolute pleasure having both of you on the line with us today. Thank you.
Thank you.
Thanks, Leah.
Now, before we sign off, I do have a last-minute update from my editorial staff regarding the crypto market. The total market capitalization has remained virtually unchanged at just over the $260 billion mark. There are no significant changes to trading activity, and the 24-hour volume indicator stands more than $60 billion. Litecoin is still the only top 5 digital assets trading in the red, as investors are locking in some of those recent gains. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin and Jason for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.